My name is Sung Lee, and I'm majoring in economics and finance. As you can see from the name of my major, I've learned both the economics and finance. But at least for me, the finance was much more interesting than economics. And in my middle school year, my dream was to be a mobile phone game programmer. Whatever I'm here to took this financial engineering course. And after I get into this department, I found out that the computer programming skills could be very needed. And that's the reason why I wanted to take this course. And I hope that my presentation could be helpful for you to get the feelings of what is the derivatives and how the derivatives works and so on. And as you can see from the name of chapter 1, it is just an introduction chapter, so I'll just introduce you some basic concept of basic derivatives instruments. And let's start with the definition of derivatives. Now, derivative is an instrument whose values depends on or is derived from the value of another asset. And we call this another asset the underlying asset. And as you can see from this definition, the value of derivative is derived from the underlying asset. And that's the reason why we call these derivatives. And there could be lots of examples: futures, forwards, swaps, options, exotic options, and so on. But the author of this book handles only the futures, forwards, and options here. So I'll follow that. Then why should you have to study about the derivatives? Here are some reasons. Derivatives could play a key role in transferring risks in the economy. It means we can use the derivatives to risk uncertainties or risk in the future. An important thing here is the underlying asset could be anything that you can imagine. For example, the weather condition could be an underlying asset. It means you can bet on the tomorrow's weather condition, like it would be rainy or not, and you cannot earn the profit from that. And furthermore, the derivatives could be mixed with other basic instruments easily. And some company found out that the concept of options could be useful for their real-world business decisions. That's the concept of real options. And you may be curious about how the derivatives could be traded. Actually, there are two kinds of markets. One for the exchange-traded market, and the other one for over-the-counter market. The difference between these two markets is the exchange market is very much standardized, and the over-the-counter market is not. Before the 2008 credit crisis, the over-the-counter market was largely unregulated, and the investment banks acted as market makers at those times, quoting bids and offers. It means they acted as liquidity provider. And there wasn't master agreements to make contract flexibly. And here in this slide, interesting thing is central counterparties. With the existence of these central counterparties, over-the-counter market could be very similar with exchange-traded market. And that's interesting here. However, after the 2008 credit crisis, over-the-counter market has become largely regulated. Maybe it's because of the role of derivatives at the credit crisis. And many people say that credit crises were occurred because of complex derivatives like mortgage-backed securities and collateralized mortgage obligations and so on. And I agree with that, but actually I've read from another book of this author. There was lots of reasons for credit crisis, and one reason was because of the government's role at that time. Before the credit crisis, United States government wanted to increase the housing supply at the time. And I've heard that someone has advised to the local government officials that the housing price is very weird and it seems that there's some bubbles. However, before the credit crisis, local government's officers neglected that advices because of their political purpose to increase the housing supply. Well, it's just my opinion, but I think that's the main reason why the credit crisis occurred. Whatever, the point in this slide is over-the-counter market is after the 2008 credit crisis, it's becoming much more similar with the exchange-traded markets. Here's the size of over-the-counter and exchange-traded market. As you can see from here, over-the-counter market is much more larger than exchange-traded market. It's almost $700 trillion, 700조 달러. It's very large, right? The point here is derivatives are very much popular in these days. And finally, the topic of Lehman bankruptcy. Preparing for this presentation, I took some time to decide whether include this topic or not. As you guys know, for Professor Kang, it could be a sensitive topic, right? However, I decided to include this topic because it's an important topic in this chapter. Lehman Brothers, the largest investment bank before the credit crisis, just blown up in a few days. The story is something like this. Before the credit crisis, Lehman Brothers took aggressive investment strategies like borrowing the short-term debt like repos and then take the money to invest in longer-term securities to get more return comparing to shorter term. However, as the situation getting worse and worse, the counterparty of repo agreement denied to rolling over their agreements. And that was the end of the story. After a few days, the Lehman Brothers became just bankrupt and blown up. And I've read from the book that before the credit crisis, CEO of Lehman Brothers, name was Dick Fuld. He even said like this: every day is a battle and we should kill the enemy. It's quite aggressive, right? And he even removed the CRO, Chief Risk Officer, from the Chief Executive Committee. And I can't understand why he did those things at the times. Maybe that was because of their conviction that too big to fail in Korean 대마불사. Maybe they have thought that with their aggressive strategy, if they are becoming they're in not that great situation, the government will help them. But it is proved to be that their thought was wrong. However, the author why talked about the Lehman bankruptcy here is derivatives could be very risky. That's the point here. Then, although the derivatives are very risky, the first purpose why these instruments were developed was to hedge the risks. However, some smart investors found out that these could be used for speculation or arbitrage. And even some company found out that they can use these derivatives to change their liabilities. For example, one company can change their liabilities from fixed rate liabilities to floating rate liabilities using the swap agreements. That could be a good example. And let's see some basic instruments. Start from forward. What is the forward? The forward contract is kind of an appointment to deliver the certain asset at a certain price at a certain date. That's the concept of forward contract. Then what about price of forward? Forward price or delivery price is kind of a tradition to set the price, making today's value of forward contract zero. If this is not the case, then one should give premium to the other counterparty, and that could be tedious thing. So it's kind of a tradition to make today's profit zero. And as I said before, the forward contract depends on the maturity, and it means forward price could be different with different maturities. And here's some concept of position. When you buy something, then we call that you are in long position on that asset. And for the short position, the reverse case. And here's some typical payoff graph of long forward position. The K here, K is delivery price, and the x-axis are the underlying asset price at maturity, and y-axis is profit at maturity. The important thing here is this graph is plotted assuming that we are in the maturity date. That's the important thing here. And at the maturity date, if the underlying asset price is larger than the delivery price, then we can earn the profit this much. It means you are betting on the price appreciation of the underlying asset. And here is the reverse case for short forward position. When you get in the short forward position, it means you're betting on the price depreciation of the underlying asset. And what about futures contract? Actually, there aren't significant difference between futures and forward contracts. The only difference is futures contracts is traded on exchange trade market, and forward contract is traded in over-the-counter market. That's the main difference, and the other things are almost equivalent. Then how can we set the forward price theoretically? This is the simplest equation for forward pricing. There could be another factor like gold release rate or other things, but in this chapter, the author is only introducing this basic formula. If this equilibrium does not hold, then there is some opportunity for arbitrage, and soon, if market is efficient, then soon the equilibrium will hold again. Then using this formula, we can calculate the theoretical formula. Here, suppose that spot price of gold is $1,400, and current one-year forward price is $1,500, and interest rate is 5% per annum. Then using the formula before, we can calculate the theoretical price of forward. Like 1,400 times 1 plus 0.05, then we can calculate the theoretical forward price. And as you can, if you calculate that, you can easily find out that theoretical forward price is a little bit smaller than current forward price. Then what should we do to get the profit? We call it bullish, buy low and sell high. We should buy the undervalued spot gold and then take a short position for overvalued forward contract. And then we can get the immediate profit for now without any investment. That's the concept of arbitrage. And here's the concept of options. The author of this book says the option is building block for any other instruments. And I agree with that because using the options, we can make various payoff schemes. That's the reason why the author said the option is building block for all other instruments. And there are call option and put option. When you buy a call option, it means you're buying a right or option to buy the underlying asset at a certain price before the maturity date. And for the put, when you buy a put option, it means you're buying the right to sell the underlying asset. That's the concept of call and put. And there are another categorizing for options, Americans and Europeans. It doesn't relate it to real Americans or Europeans. It's just a name of options, and whether it is American options or European options are depending on whether you can exercise before the maturity date or not. If you can, then we call that American options, and if you cannot, then we call it European options. That's the difference. Now we've all learned about the futures, forward, and options in this chapter. Then we can compare those two things. The main difference between options and futures are when you buy an option, it means you're buying a right. So before the maturity date or at the maturity date, if the payoff is not that preferable for you, then you can just give up your right. It's not an obligation. However, for the forward or futures contract, it's kind of a binding obligation, so you must deliver something on that maturity date. That's the main difference. And let's see the players in derivatives market. There are three players in derivatives markets: hedgers and speculators and arbitragers. You'll see these kind of activities, seeing some examples. Let's see the hedging examples first. Suppose that you have 1,000 Microsoft shares, currently worth $28 per share, and 2 months put with with a strike price of $27.5, costs $1 for now. And then this investor is worrying about price depreciation. Then what should he do? Yeah, as you've seen before, if you buy a put option, then you can earn the profit when the price depreciates. And this is kind of famous strategy. We call it protective put. The payoff is thing like this one, and this is just a final payoff. And the start point is spot stock price, and seeing like this one, and the put option, long put option, seeing like this one, and we can vertically summing up those two payoffs to make this final payoffs. And as you can see here, if the price depreciate over the limit point here, then we don't lose lots of money. We can get some insurance. So that's the reason why we call this strategy protective put. Then what about speculation? If someone has a conviction that price will goes up or goes down, then he or she can bet on that. However, there could be two alternatives: using spot trade, and the other one is using derivatives like options. Let's suppose that some investor has a conviction about the price appreciation, then one can buy all the stocks using his all of money, and the other one can buy the call option for using all of his money. But after the 2 months later, if his conviction is proved to be right, then who bought the call option will get the profit much more than the other one who bought the stock before the 2 months. But however, if the conviction was proved to be wrong, then someone who bought the call options loss amount will be enormous. Even he or she could be bankrupt or default. And that's the effect we call leverage effect. That's the reason why derivatives trading could be risky. And here's an arbitrage example. It's very easy, right? In the view of United States people, the stock price in London is $153, right? Then it means the same stock is same stock's price is not equivalent in different market. So we should buy low and sell high again. And then we can earn the immediate profit without any investment. The $3 profit for now. And finally, the introduction of hedge funds. When I first time heard about the name of hedge funds, I thought like this fund is just purpose is just for hedging, but that was wrong. This fund's purpose is hedging regulations. And actually, for sophisticated investors, regulations for mutual funds like disclosure or make it redeemable and limiting use of leverage could be bad news because they use the proprietary trading strategies, and that kind of strategy should be kept in secret. and that's the reason why in these days hedge funds are famous and popular. Actually, there could be many examples for hedge funds, long-term capital management and Renaissance technology or source funds, and so on. They were very successful, but it doesn't mean that all the hedge funds are successful. You should be cautious about it. There are many discussions about hedge funds successfulness or something like that. And the authors propose why he introduced hedge funds here is to inform you that the hedge funds are the main user of derivatives market for their purpose of hedging, arbitrage, or speculation. And this is the end of my presentation. Thank you for listening to my boring. Maybe you guys already knows about this contents, right? Thanks.
Please raise your hand if you heard of a forward contract for the first time here. Forward. 선도 선물 계약 처음 들어봤다 여기서. 한 번씩 들어보고. Then I'll ask some questions. Suppose there is an apartment in 왕십리, luxurious apartment. It is $1 billion. Okay. Right now, so current market price is $1 million. Okay, so it is a luxurious apartment. And then suppose you are interested in moving to that apartment 1 year later. Okay. Then maybe you can make arrangement with the owner of the apartment, right? Because you are not interested in house and moving there right now, then owner and you just make arrangement such that okay, I'll pay some dollars to you 1 year later, and then you just give me the apartment. So that's the called forward contract. And the amount of money you decide each other about the future price. That is the forward contract. Then what would happen if forward contract is too high, like $2 million, for example? So that currently the apartment is $1 million, but if you want to move into the house 1 year later, and then you have to make arrangement right now. The important part is right now. Right now that you will pay $2 million 1 year later, and you move into the house. Okay, then $2 million is clearly looks large. But if people trade that kind of contract right now, then what would happen? What are you going to do if you believe that it's too high? Will you make that forward contract? Will you pay $2 million 1 year later and buy that house? Will you? No, right? Because it is too expensive, right? Then you have to come up with another idea, okay? But suppose that $2 million is too expensive, okay? But you definitely want to move into the apartment 1 year later. Okay, so you want apartment 1 year later. Okay, option 1 was for the contract that you give $2 million to the owner 1 year later, and you simply move into the house. That's option 1. What would be the another strategy of getting the house? If that is too expensive, you want house 1 year later, then what you can do right now? Yeah. Let's make it more simple. Okay. Again, my question is, you are interested in moving to the house 1 year later. For the contract too expensive, you don't want to pay $2 million 1 year later. But you still want to move into the house. Then what you can do right now in order to move into the house 1 year later? 1년 후에 아파트가 필요해. 지금 여러분 그럴 수 있어요. 지금부터 사서 있으면 되겠네. 그렇죠? 일단 내가 안 들어가고 있는 거잖아. 안 그래? Alternative strategy, you simply buy the house right now and move into the house 1 year later. Right? And that is exactly similar to for the contract. For the contract, you pay $2 million in 1 year later and move into the house. Instead, you pay simply $1 million today and wait 1 year and move into the house. What's wrong with that? Okay, then we have to think about the cost of doing it. What is the cost? Of course, you need $1 million right now. And then, because you have to pay $1 million right now, what would be the financing cost of it? What is that? So suppose, yeah, basically, of course, your credit rating is low, but let's assume that your parents are rich. Okay? And in order to buy a house in $1 million, you have to borrow $1 million from the bank right now. Right? It's another way of saying opportunity cost. Right? So you borrow $1 million bank today, and then how much you have to pay back 1 year later? Suppose interest rate is 3%. Okay. Then in 1 year later, you have to pay $1 million multiplied with 1 plus 3%, right? Okay. Then let's compare that with for the contract. In for the contract, you pay $2 million 1 year later. Okay. In alternative contract, you borrow $1 million and give it to the owner. And 1 year later, you simply pay back to the bank $1 million multiplied with 1 plus 3%, which is far smaller than $2 million, right? And that doesn't make sense. Right? That doesn't make sense. Therefore, there's a formula over here. For the contract, it should be $1 million plus financing cost over that period. Like this. The final cost should be, for the contract should be $1 million, 1 plus 3%, T was 1 year, because it's 1 year. Right? So that should be for the contract. Does it make sense? Right? Otherwise, if that is too high, if it looks like this, then no one will enter into the for the contract. In addition, everyone wants to sell this for the contract, which means short position. If this is this way, everyone wants to buy this for the contract. Everyone wants to take the long position for the contract. So does it make sense? I don't want to memorize anything in this class. You don't have to memorize it. Intuition is so simple. Okay, then let's slightly generalize the problem. Suppose, okay, now of course you can shorter strategy is that for the next 1 year, you can buy the house, you can rent to someone else, right? If there is an option of renting the house for the 1 year, what should be the forward contract? Should it be higher or lower than $1 million multiplied by 1 plus 3%, which is $103 million. Okay. No. $1.03 billion. It should be higher or lower for the contract. If there is option of renting, should for the price higher than this one or lower than this one? Raise your hand if you think it should be higher. Lower. Raise your hand if you think it should be lower. 1, 2, 3. What is your thought? Why you didn't raise your hand? 두 개가 같아야 된다. 렌트를 할 수 있는 옵션이 있던 없던 간에. 오케이, then why? why? 이유를 설명해. 아니 그러니까 1년 후에 아파트를 정관할 방법이 하나 포워드 컨셉트고 하나는 지금부터 가지고 있는 방법이 있다고 했잖아. 근데 이제 지금부터 가지고 있는데 그 사이에 여러분이 하우스를 또 렌트도 해줄 수 있단 말이야. 하나라고. 그럼 어떻게 될 것 같아? 포워드 컨셉트 이미 가져야 될 것 같아. 설명해봐. 왜 너를 렌트 한번 하고 예? 싸게 사는 거랑 비슷하니까. That's I think that's yeah, right. But if you have option of renting, then you know, if you have simply for the contract, you are not eligible to receive that rent. Okay? But if you have the physical apartment as an owner, then you can make money. Therefore, spot contract, buying apartment right now becomes more popular. Okay? Therefore, people want to hold the apartment right now. Therefore, in order to make market equilibrium such that people will to make for the contract, so for the contract should be cheaper. Right? Otherwise, people will not enter into the for the contract. We will learn that in more detail later. So the interest rate, the financing cost, there are many other costs. Okay, that cost is called the cost of carry and rent. That kind of thing is convenient to you. So for the contract should increase with cost of carry, right? Because when there is cost of carrying the real product, then people don't want to hold the product and instead hold the for the contract. Therefore, for the contract should be more popular, more expensive. On the other end, if there is convenience in positive cash flow from the product, then people are more likely to hold the spot contract apartment right now. Therefore, for the contract, price of the for the price go down. 지분 있는 사람. 그러다 이런 거 수학식 절대 외우지 마세요. 이런 거 이런 식으로 외워야 됩니다. 포드텔링으로 외우고 가세요. 자, 질문. 자, 이제 포드 컨셉트 확실히 이해했죠? 근데 이보다 복잡한 것도 없습니다. Today, I want to introduce trading strategy as a part of our testing okay. This is the Journal of Accounting paper written by Jacob Thomas and Frank Zhang. In the abstract, they argue that while the returns to investing in predictable future earnings change has been documented before, this research suggests that predicting change in future tax expense also generates incremental future return. Okay. One emerging literature has shown that tax information derived from GAAP, okay, financial statements contain value relevant information, both in terms of explaining contemporaneous return as well as predicting future returns. So by investigating how much firm pays with tax, this paper argued that that amount of tax that firm pays has some value relevant information or future returns or future stock price. Okay? That is very interesting, right? It means that if you investigate firm's tax expenses, then it means that you can make money. That's basically what it says, because it's value relevant information. This value relevant information is incremental to that contain the book income. Okay, so like 당기순이, this tax part, it said the tax part has value relevant information in addition to the information in financial statement. Let's think about why tax information is important. In which case tax information is important in predicting future returns. Can anyone think? Can anyone make any suggestion? How come amount of tax that firm spend this quarter has some power to predict future stock price? Okay, how come? Do you think that is possible? 여기 세무회계 수업 들은 사람, 세법 결혼이나 세무회계를 왜 배우지? 그러면 법인세 계산 안 해도 되는 세무회계 배울 필요 없는 건가? Let's see whether that is right statement. So in this paper, okay, the authors argue that in this paper we investigate whether seasonally different quarterly tax expense, our proxy for the surprise or information released in tax expense, predict future return. So this author of this paper argued that seasonally adjusted tax expense. So tax today, okay, minus it is seasonally adjusted. So tax report is every quarter, so T minus 4. 4 quarters away, so it is 1 year away, 1 year ago. So the authors argue that the difference between firm's tax expense today and then 1 year ago, 4 quarters ago, has some information about future stock return. Okay. So return T plus 4, maybe T plus 1 next quarter. So if it is in positive, it means there is positive tax surprise. Firm pays more tax than before. If it is negative, firm pays less tax than before. Then the question is whether the relationship between, they argue that there is a relationship between this future return and tax surprise today. Okay. Can you make guess then whether it is positive or negative if there is a relationship? Then they argue that it is good news Therefore, positive tax supply will predict future return. So it means that if we calculate tax of the firm, compare it with the 3 quarters ago, and then sort the firm, we will be able to make money if we invest in firms with high tax supply and take short position of the firms with low tax supply. Okay. The authors of this paper basically imply that, right? Because it predicts some positive. Okay, then there is still question remains. Okay, suppose this is a positive, okay, positive information. Does positive information always make you always provide you investment opportunity? 그러니까 여러분이 말때 어떤 회사에 대한 굿뉴스가 있어. 그 굿뉴스가 있으면 그 회사 주식은 반드시 미래에 올라가는. 왜 안 돼요? 내가 좀 근본적인 질문 해볼게. 예를 들어 삼성전자에서 이번에 갤럭시 S5를 많이 벌어서 돈을 많이 벌었습니다. 리포트를 해서. 그럼 여러분 가서 삼성전자 주식 사야 되나? 왜 안 사? 어떻게 올라가니까? 또 다른 사람들. 아주 기본적인 이야기가 아주 정확해. 그렇지, 굿뉴스가 있다고 가서 여기 주식 사지 않잖아. 왜냐하면 굿뉴스가 나오면 그 순간 스탁 프라이스가 점프업 할 거 아니야. 올라가면 그때 가서 사봐야, 그때 가서 사봐야 지금부터 미래까지 스탁 리턴은 똑같은 거 아니야. 떨어질 수 있고 뉴스가 이미 반영됐느냐 안 반영됐느냐가 중요할 거 아니야. 근데 이 사람들 말을 들어보면 이게 굿뉴스야. 일단 굿뉴스고 이 뉴스에 투자를 하면 이 기간부터 다음 쿼터까지 리턴이 더 높은 리턴을 가져온다는 거지. 굿뉴스는 굿뉴스인데 시장에 제대로 반영이 안 돼서 우리한테 투자할 기회를 준다는 거 아니야. 이게 말하는 그런 식이 되는 거지. 논리가 되는 논리가. 그렇지 않겠어? 동의하나요? 네. 왜 나쁜 뉴스 있어? 네. 네, 그럴 수 있지. 그렇게 정확히 말하면 이것과 반대의 결과를 슈미트라는 사람이 그 사람 뭐냐면 회사도 텍스에 관한 케이퍼빌리티가 있다는 거예요. 세금을 적게 낸다는 것은 세금을 잘 관리할 수 있는 능력이 있다는 거예요. 그러니까 앞으로 텍스 이쪽에서도 계속 세금을 적게 낼 수 있죠. 그래서 앞으로 계속 세금을 적게 낼 수 있는 능력을 그게 보여준다면 그게 파지티브 인포메이션이 시작해서 올라간다야지. 이거랑 약간 반대죠. 근데 이 사람들은 거기에 이렇게 반대하는 거예요. 그런 연구도 있는데 그 연구는 데이터가 잘못됐다. 분석을 잘못됐다. 실제로 정확하게 텍스 매니지먼트 케이퍼빌리티가 있어서 그게 스탑 프라이스였다. 근데 이 사람들은 그렇다고 텍스를 많이 낸다는 건 그런 측면도 있겠지만 그것보다도 텍스를 많이 내면 좋은 거랑 지나가요. 그러면 이제 다시 원래 내 질문으로 돌아와서 이게 굿뉴스고 그 기간 동안 우리한테 돈을 벌 수 있다고 하면 이 텍스 오늘 회사가 텍스 얼마나 다 파가지고 있는데 그걸 알면 돈을 벌 수 있는 기회를 준다는 것은 시장이 여기에 대해서 언더리액트 한다는 거 아니야. 네. 이게 만약 굿뉴스라면 굿뉴스에 대해서 시장이 제대로 반응하지 않고 덜 반응하니까 나는 미리서 여기에 반응해가지고 그 반응 기간 동안 돈을 벌 수 있다는 그런 말이겠죠. 그런 거겠지. 그냥 언더리액트. 이게 두 가지 스토리가 있는데 회사가 마켓이 언더리액트. 내가 당연히 따르죠. 왜 마켓이 언더리액트 하는가? 왜 마켓이 언더리액트 할까? 이 사람들은 뭘 이야기하냐면 마켓이 언더리액트 하는 이유는 세무회계 어렵기 때문이다. 이 사람들 주장해요. 여러분 세무회계 수업 아무도 안 들어봤다니까. 좀 그런 것도 들어보면 좋을 텐데. 물론 CPA 준비하는 사람은 좋은 학점밖에 안 되겠지. 저 세무회계 수업 들었는데 CPA 좀 해본 적도 없지만 재밌을 것 같아서 들었다가 아주 피보는 그런 경험이 있습니다. 뭔 이렇게 예외도 많고 룰도 많고 복잡한. 그래서 기본적으로 텍스 어카운팅이 힘들어서 회사의 텍스를 제대로 이해할 수 없다. too complex하다. 여기 하나가 있고 두 번째는 뭐냐면 too opaqu하다라는 거지. 아까 말한 거랑 비슷한데 회사가 텍스를 얼마나 낼 것이 하는 건 물론 공식이 있긴 하지만 이 기계적인 게 아니에요. 회사가 전략적으로 조절할 수 있어. 네? 이연 법인세 뭐 그런 거 있잖아. 디퍼드 텍스가 있고 어떻게 하느냐에 따라서 미리 세금을 덜 낼 수도 있고 더 낼 수도 있고 조절이 가능하단 말이에요. 그리고 회사가 전략적으로 이렇게 조절을 하기 때문에 좀 오팍하다는 거예요. 바로 그런 면 때문에 사람들이 여기에 대해서 이해하기 힘들고 이게 굿뉴스인데 불구하고 언더레이트하고 그렇기 때문에 우리가 미리 계획하고 돈을 벌 수 있다는 거예요. 이제 질문은 그러면 그 다음 질문이 그게 되겠죠. 그러면 왜 이게 굿뉴스인가? 이게 그 다음 말이죠. 단순히 돈을 많이 벌어서 세금을 많이 냈으니까 굿뉴스다. 당연히 돈을 많이 벌면 굿뉴스. 근데 아까도 말했지만 돈을 많이 벌었다고 결국 미래 리턴은 미래 수익률에 대한 이야기인데 그렇잖아요. 미래 돈을 많이 벌거나 스탁 프라이스가 리턴이 높다 낮다라는 것은 뭐지? 내가 이 회사에 돈을 투자해서 벌 수 있다 없다는 말은 이 회사가 미래에 어떻게 될 거라는 이야기지 현재에 대한 이야기는 아니라고. 그러니까 굿뉴스라는 건 미래의 이 회사에 대해서 뭔가를 알려주는 굿뉴스라는 거지. 그 미래에 뭐에 대한 걸 알려주느냐가 이제 질문이 되겠죠. 그렇죠? 그래서요. 배당금에 세금 매기지. 그 기업 재무 시간에 안 배웠나? 배당에 세금을 매니까 디비던드 밀러 모델리아 디비던드 옵티멀 디비던드 그게 굉장히 중요하게 나오는데 배당의 텍스. 어쨌든 이거 배당 텍스 그 디비던드 텍스 얘기는 아니에요. 그 코퍼레 파이낸스 안 배웠나? 배웠어요? 그냥 코퍼레 디비던드 텍스라고 생각해요. 그건 굉장히 지금 무슨 과지? 영역 부족한 파이낸스 영. 방금 그 질문. 재무가 인터뷰 적나라하게 보여주겠지. 이거 굉장히 좋아. 밀러 모딜리아는 디비던드 때를 있잖아. 그게 모딜리아가 생각나는 거야. 밀러 모딜리아가 이렇게 두 가지 이야기를 했잖아. 하나는 캐피탈 스트럭처에 대한 이야기고 코퍼레이트 파이낸스 제일 중요한 토픽이고요. 또 하나가 디비던드에 대한 이야기. 디비던드에 대해서 뭐라고 얘기해요? 그 이름이 뭐죠? 박수련 학생 재무관리 밀러 모델리아가 디비던드 네. 그래서 그건 이제 벤 에코티에 대한 이야기. 그거 말고 디비던드에 대한 사실 그것도 아주 중요한 이야기예요. 법인세가 있냐 없느냐에 따라서 net equity 뭘 써도 상관없다라고 했다가 크게 대수를 쓰면 보증세가 필요하니까 이제 또 무조건 대수 많이 써야 된다. 이 놀러 보증되는데 net equity 캡타스 전체에 대한 이야기고 그거 말고 디비던드에 대한 배당이 있거든요. 또 배웠을 거예요. 당연히 배웠을 거예요. 안 배웠어. 아, 그래? 어쨌든 디비던드를 얼마나 줘야 하나에 대해서 연구를 했는데 첫째, 디비던드 텍스가 없을 경우 얼마를 줘도 상관없다. 이제 디비던드 텍스가 있으니까 안 주면 안 줄수록 좋다. 디비던드 안 주고 그냥 계속 산액 유보만 하다가 주가가 올라가고 그만큼 주식을 파는 데가 안 나. 뭐 그런 이야기입니다. 이거 굉장히 중요한 이야기인데 여러분 중에 CFA 시험 보고 이러면 뭐 굉장히 중요한 이야기입니다. 어쨌든 이걸로 다시 돌아와서 왜 이게 미래 수익에 대해서 좋은 뉴스냐? 네, 한번 읽어보겠습니다. Tax surprise related to tax predicts future return. 이 배경하고 이야기하고 tax expense, the amount subtract different. So how we can calculate tax expense? The two authors calculate tax expense as the amount subtracted from pre-tax book income to get after-tax income. Okay, so if we subtract pre-tax book income. And then if we find the gap between pre-tax book income and after-tax book income, then the difference should be tax expense. Right? That makes sense. Right? They use this approach because the tax reporting, tax statement of the firm is confidential. Right? 그러니까 여러분이 얼마나 세금 내고 이런 거 국세청에 다 자료가 있겠지만 그 사람들이 못 보는 거죠. 그래서 파이낸셜 스테이트먼트를 분석하면 간접적으로 추정이 가능해요. 프리텍스 부인권과 애프터 부인권을 비교해서 그 차이를 애프터 텍스라고 텍스 익스펜스로 계산하고 이거를 지금 계산하고 1년 전에 계산하고 서프라이즈로 계산한다. 그래서 예전에는 사람들이 회사가 텍스를 많이 냈다는 게 나쁜 뉴스라고 생각해요. 왜냐면 텍스 비용이 있어요. 그래서 회사가 돈을 얼마나 많이 거나 아닌 걸 일단 건축하고 나면 텍스를 얼마나 많이 내고 회사가 당연히 텍스 비용이니까 많이 받는 거잖아. 그리고 아까 얘기했던 텍스 수실이라는 것도 비중은 그만큼 텍스 반영이 돼야 된다. 이렇게 옛날에 생각했습니다. 그러나 yet more recent evidence supports the view that tax expense surprise is good news in general, possibly because it prompts for change in core profitability. The recent research argued that more tax is good news because it has some information about core profitability, core competitiveness of the firm, core capability of the firm to generate profit. Okay, if that is true, more tax should be reflected in stock price. And if market react, it should generate positive stock return in the future. And another one is under reaction. Investor, even if it is good news, if market respond instantly, okay, we cannot be able to make money. Okay, that's the semi-weak form market hypothesis. But market underreact. Confusion about the predictable implication of tax expense surprise is understandable. Okay, because tax disclosure are complex and open. 세무회계 is hard. That's the reason. That's why investors underreact. That's why if we understand this correctly before and we can. And then about the authors find that quarterly tax expense surprise is related positively to the next quarter stock return. So stock return from today to next quarter. Okay. Even after we control for warning surprise, so we get rid of positive cash flow effect. which are measured seasonally different quarterly earnings. Okay, so we can make earnings surprise similar to that. So after we control that earning part, still this one has a prediction power about future. So their result suggest two channels. Okay, then the question is how come, why it is good news about future? They basically provide two theory. Okay, two channels for this delayed market response. First, current tax expense surprise is related with positive next quarter surprise for earning and tax expense. So authors argue that if there is a positive surprise, if it is positive, it means that it is likely to imply that in future firm will make more money. Positive earnings surprise. In addition, if it is positive, then firms will have another kind of tax expense surprise next quarter. Okay. That's the key reason. So basically, their pricing anomaly. It is anomaly, right? In the efficient market, this kind of pattern shouldn't arise. Okay? Stock return shouldn't be predictable. Okay? Based on today's information, that's the efficient market hypothesis. It is an anomaly because it says that we can predict future return based on today's information about tax. So it is a pricing anomaly. So our pricing anomaly can therefore be described as tax expense momentum. That is, good news implied by tax expense this quarter is followed by good news next quarter. Okay. So if we have a positive on this one, then there we expect we have good news in future. If it is that we will have a bad news in future. Actually, there are other similar literature like Lev and Nissim documents that the ratio of annual tax income. So this Lev and Nissim, they argue that okay, in this case, okay, actually they normalize this one as that t minus 4. Okay, they need normalization. So they call this delta t. So they call this tax surprise. In the previous literature, they analyze only this part, ratio of the tax and asset, and they argue that it also has a predictive power about future return. But this literature, this paper argue that, well, the gap between the tax and seasonally adjusted tax surprise is important. That's their argument. And then Schmidt, 2006, this argument is exactly your argument. There is an effective tax rate and tax management skill matter. So if there is more tax, it is actually bad news. But the authors of this paper argue that, well, that makes sense theoretically, but Schmidt made a mistake in data analysis. That's all we get before. So again, we have to go into the economic equation. Two non-mutually exclusive rationales have been provided in the prior literature for why a higher tax surprise might be viewed as a good news. Okay? So why it is good news? Okay. First, lower tax expense is a signal of managerial effort to understate tax expense and overstate pre-tax income. That is possible. They pay less tax because they did smart tax accounting. So arbitrarily, they basically it is possible they manipulate their income. In that case, the reported earning of this period should have low quality. Right? As a result, lower tax expense is associated with the pre-tax book income that is of a lower quality. In the sense that it is less persistent and will be followed by lower future pre-tax book income. So it is in the sense opposite argument of yours. If a firm pay low amount of tax, then clearly they receive more money, but the quality of earning is low, right? It means that in the future earning should be lower. The quality of earning is low, the Another one, the second rationale for positive relation between tax expense and contemporary return is that both current and deferred portion of tax expense provide influence on the underlying profitability separate from the contained within book income. It argues that, okay, it predicts future tax expense, okay, future tax surprises, and they argue that that also increase future tax expense. Therefore, this has information about the quality of their profit, and in addition to that, and the authors argue that this part may contain information about the fundamental characteristics of the profitability of the firm. I'll discuss that part in more detail shortly. Anyway, they developed the budget theory, returning to the two hypotheses that underlie this paper. We believe that increase in tax expense should be viewed as good news, and investor underreact initially to the news, but any underreaction is corrected subsequently by the arrival of news about upcoming quarter's result. Okay? So it means that, okay, it is their hypothesis. So tax disclosures in financial reports are complex and opaque. That's what I told you. Okay, complexity arises because the underlying tax returns are complex, as well as because additional complexity is introduced by the rules that translate tax returns to financial reports. Okay, it basically means that tax 세무회계 is hard. Okay? And opacity arises for a variety of reasons, including the strategic interest of management to obfuscate the position taken a different tax issue. Deliberately, management manipulate tax expense, so it is opaque. So it is understandable that this is hard information, not easily understandable, therefore market underreact. So it is their hypothesis. P1. Tax expense surprise are positively related to future stock return. Okay, if we have tax expense surprise, then it will increase future stock return, so we will be able to make money. P2 and P3 is the reason why. Reason number one, tax expense surprise positively related to the future's earnings price. Okay, because it is about future earnings price, it should include future stock return. In addition, tax expense surprise are positively related to future tax expense surprise. Okay. That additional information. So while P1, okay, P2 and P3 is underlying theory of the P1. So while P1 follows directly from two hypotheses, P2 and P3 represent our effort to describe specific channel by which the future implication of this quarter tax expense surprise for underlying profitability is revealed. The rationale underlying P2 is that tax expense surprise incorporates information about underlying profitability that is not included in earnings surprise. That information about underlying profitability revealed in future way. So again, it is about today's tax expense surprise will be related to future earnings surprise. Now the more interesting part is this one, P3. The rationale underlying P3 is that tax expense changes are positively autocorrelated. Okay, autocorrelated means that positively autocorrelated means that if we have a positive tax surprise, then we have another positive surprise. That is a positive. Negative is the other way, and that future tax expense change, okay, reflects some underlying future profitability not reflected in future earnings surprise. Again, P2 is about future earnings surprise, and P3 argue that in addition to the future earnings surprise, there is another fundamental part about future. Okay, that's their theory. And in this paper, they all test this hypothesis, and they successfully, very smartly show that they are all true. We will see how they did that. Now, okay, in order for testing, first, their primary explanatory variable is tax expense surprise. Okay, it is our primary explanatory variable. We want to explain patterns with this information. Delta T is measured as the tax expense per share. So per share tax expense in quarter Q minus per tax expense in quarter Q minus 4. And that's scaled by assets per share in quarter Q minus 4. And our primary control variable. Okay. Primary control variable is that, okay. There is a relationship between this and this one, but there may be other information that can affect future returns, right? And they want to control other part, and they want to see only pure relationship between this and this. Then what kind of other information they have to control? Well, obviously, that information should be about earnings surprise. Our primary control variable is earnings surprise delta E, okay, which is measured as the earnings per share in quarter Q. So we can simply change the text into the E earnings minus earnings per share in Q minus 4 scaled by asset per share in quarter Q minus 4. And next, our core dependent variable, okay. The variable we want to explain is, of course, our future return. Okay? Our main dependent variable. So basically, we want to look at the relationship between this explanatory variable and this dependent variable by controlling this one. Okay. What is our dependent variable? Is, of course, this one. Okay. Future return. Our dependent variable is the return over a future 3 months. Okay. 1 quarter. Okay. RETQ plus 1. Beginning from the 4th month after the end of the quarter Q. Okay. So it is a descriptive statistic. You can skip this. Well, and this is a very interesting table. For every firm, okay, for every staff actually, we can calculate this one, right? We calculate this one for each firm, and then we can sort the firms, right? We can sort the firm, and then put firms with a small one into the front, firms with a big one in the back, right? So we can sort the form, like 10,000 forms to sort. Next, what we do is we can grouping by 10%. Top 10% is the top 10% of the form with a small list of this one. And next 10%, and next 10%. So we call that one D1, D2, D3, something like that. And so D10, bottom 10% is the group of the forms with largest tax surprise. We group that, and therefore for each group, of course, we can calculate average of this one, right? And this is the average delta T. Because we sort forms based on this tax surprise, where bottom has lowest value, minus 2% in this case, and then minus 0.52%, and it go up, and bottom 10% is 2.24%, right? That makes sense, because we sort the forms based on this one, and in which group we calculate average. So just showing the result of the sort. But next one is more interesting. Okay. Now for each 10 group, okay, for each 10%, okay. Now we can check what would be the performance of the each group, right? Each 10% can be regarded as a portfolio. So we have a 10 portfolio, and we can check the return of the each 10% for the next period. Okay? The result is this. They are nicely aligned, right? Bottom 10% is the lowest, 2.23%. Now we just better. 10% with lowest this one has 2.34%. Next 10% is 2.95%, and the group of the firms with biggest tax surprise is 6.24%, right? So it shows that, okay, if we sort the firm based on tax surprise, that sorting is likely to correspond to sorting based on the future performance. And there is another two important thing. It is like a P1 part in the previous hypothesis. It's a P2 and P3 part. Okay. Again, we sort firm based on 10% of today's result, and then we can just what would be the tax surprise of each 10% next quarter. Again, they are nicely sorted. Okay. Bottom is 3.85% and top is 7.37%, which means that if there is a small tax surprise, that firm is likely to have a small tax surprise next quarter. If a firm has a large tax surprise today, then they are likely to have a large tax surprise, right? And then another important thing is that, okay, this part, earnings surprise next quarter. Again, this is nicely aligned. If we have a small number for this one, okay, we have a small earnings surprise next quarter. If we have a large tax surprise today, then it is likely that we have a large earnings surprise tomorrow, basically 3 months later. So they argue that because of this factor and this factor, we can expect higher return. It is in line with their hypothesis, right? 질문이나 하실까요? 어렵지 않지? 전혀 안 어렵죠? 어렵나? 이름이 뭐야? 네. 어려워요? 조금 어려워요? 뭐가 어려워요? 그냥 그럼 익숙한 거 배우려면 수업을 들을 필요 없고 익숙한 것만 가르치고 이해가 안 가는 사람 무슨 말인지 알겠어요? 무슨 말인지 알겠어요? 그래 안 하는데 심플한 건 잘했어요. 네? 회사들이 얼마나 해도 예전에 비해서 많이 된다 하는 거 회사들 줄을 세워놨더니 그 줄하고 미래 얘네들이 얼마나 스탁 프라이스 올라갈 거다 하는 성과하고 똑같고 미래 그런 사람들이 다시 세금도 많이 내고 많이 내고 줄이고 그런 사람들이 많이 미래 돈도 많이 벌 것 같아요. 줄이고 세계가 딱딱하게 위치한다는 거야. 그런 거죠. 네. 과거 데이터를 모아서 시뮬레이션 이 다음 기 보고 이렇게 모아서 또 이 다음 거 보고 줄을 세워서 이 다음 거 보고 여기서 줄 세워서 이 다음 거 보고 하더니 계속 그런 식으로 나타나더라. 뭐 우리가 타임머신이 없어서 미래를 볼 수 있는 그거 말고 그거 없잖아. 그거 말고 어떻게 할까? 제가 아비트리라고 이렇게 교과서에 나온 말만 들으면 현실에서 어떻게 이용하다. 저 교과서에 나오는 아비트리처럼 스칼을 이렇게 머리를 좀 이런 식으로 하거든요. 쉬는 시간 없이 빨리 하고 끝내려고 했는데 이거 제가 너무 지금 많이 크지. 안 쉬고 그냥 하죠. 그냥. 쉬는 시간이 꼭 필요하다. 쉬었으면 좋겠다. 이제 그냥 하겠습니다. 화장실 가고 싶으면 그냥 일어나서 갔다 오면 됩니다. 담배 피우고 싶다. 담배 피우고 오죠. It is a graph. Okay. So the number here are future returns. Okay. And there is a 3 ways of sorting the firm. The first one is we can simply sort based on this one. And again, as we saw, it is nicely aligned from row to the bottom. And if we consider long short portfolio, take a long position on the bottom 10% and take short position on the top 10%, it generates 4% per quarter. Okay, so it is around 16% per year. Huge. And then we can sort the film firms another way. Another way is that we can sort the firms by the today's earnings surprise. Okay? And no wonder if we have a positive earnings surprise and then we have more return in future, even nicer. And then what the authors smartly did is that when they sorting firms based on tax surprise, they get rid of effect of the earning surprise, and then sort firms purely based on this tax surprise. It is called tax portfolio sorted by residual T. This residual is calculated like this one. So they did some statistical analysis. So they find the relationship between tax surprise and earning surprise. Okay, and then there is error term, right? This is term that this earning surprise explain. So they did this analysis for each firm, and they picked this error for each firm, and they sorted on that. They sorted firms based on that, and they find that even after they get rid of this earning effect, still the firms have this nice sorting of the future return. Okay? So it means that even after we get rid of today's earning surprise effect from this tax surprise, that even the residual part without the earning surprise part can have the power of the predictive future returns. It means that we can make money even without the information about this part, even without considering this part. So there is information about tax surprise that is not explained by today's earning surprise. 내가 그런 말 한 적이 없는데 무슨 말이 있는 거예요? 자, 그러니까 큰 회사들이 세금을 더 많이 내겠지. 근데 회사 사이즈를 내가 나눠줬잖아, 분모로. 이미 사이즈 대비 텍스 개념이. 그러니까 사이즈 효과는 이미 없는 거예요. 무조건 텍스 절대적인 사이즈로 보면 당연히 큰 형이 제일 많이 낼 거 아니야. 근데 회사 규모에 비해서 얼마나 되느냐를 봐야 정확한 보이니까. 또 질문 있는 사람? 질문 없어요? 나로 드시 질문. 아니 그게 제일 재밌잖아. 그러니까 포트폴리오인데 얘 포트폴리오에서 얘 포트폴리오를 빼봐. 여기서 이걸 빼봐. 그러면은 한 그룹의 포트폴리오를 사고 한 그룹의 포트폴리오를 파는 거고 이거 지로 코스트 포트폴리오가 없거든. 내가 하나는 팔고 이제 밸런스를 해서 하나는 팔고 하나는 사는 거지. $100만큼 삼성전자 주식을 사고 $100만큼 LG전자 주식을 팔아. 그러면 나는 아무것도 투자하지 않고 딱 양쪽에 포지션을 취한 거 아니야. 그런 작업을 했을 때 어떤 포트폴리오 포트폴리오다. 그러니까 당연히 바텀에 있는 애들이 리턴이 높으니까 얘를 바이하고 탑에 있는 거 숏하면 그만큼이 시그니피컨트하다는 거지. 11 얘네들이 보통 E 넘어가면 이게 T 값이라 그러는데 여러분 고등학교 때 수학 때 통계 시간에 그때 G 값이라고 했다고. 내가 E 넘으면 시그니피컨트한 거야. E는커녕 굉장히 크잖아. 다 시그니피컨트한 숫자라고 이렇게. 잘 알아야 돼. B+C 가면 이렇게 공부할 수 있어요. 뭐 이런 사람들이 되게 많아. 그런 거 볼 때마다 왜 그런 일이 발생하나? 언더라인 이코노미를 보시잖아. 그런 거 없이 사람들이 이렇게 하고 돈 벌었어요. 그런 거 절대 기분 안 돼. 저도 이제 문화문화도에서 공부할 때 주로 하는 일이 헤지펀드, 트레이딩 스트레이지 이런 걸 개발, 이런 거 이제 헤지펀드 해가지고 이야기하는 거예요. 그런 헤지펀드 매니저들 그래서 이렇게 하면 돈 얼마 벌어요? 절대 이런 거 관심 없어요. Why? 언더라인 규칙이 뭐냐? 언더라인 띠어리가 뭐냐? 그게 어쨌든 띠어리가 없으면 그냥 데이터에서 이어져 있는 거야. 띠어리가 믿을만 해야 그 띠어리가 틀리지 않으면 스마트 헤지펀드 매니저도 그 사람 절대 이렇게 하면 돈 얼마 벌고 얼마 벌었다 이거 절대 아무도 안 믿어. 오로지 띠어리만 믿어요. 띠어리만. 이게 말이 되는 소리. 거기에 수학은 중요하니까 형상이 말로. tax expense surprise and future stock return with risk control based on 4-factor model. Why? 그래서 이 부분을 뭐라고 부르냐면, 그래서 이것도 초과 수익률이에요. 이것도 개별 주식의 초과 수익률인 거지. 리스크 레이트 대비. 그리고 이거는 시장 포트폴리오의 수익 초과 수익률. 둘 사이는 베타 관계가 있다는 거지. 아, 그래 내가 이런 것까지 설명해야 되나 정말? 아, 그래가지고 이거 있잖아 이거. 그래서 RI. 그래서 기대 수익률은 회사의 기대 수익률은 그렇죠? 뭐에 의해서 결정되나? 베타에 의해서 결정된다. 그래서 베타가 크면 기대 수익률이 크고, 베타가 낮으면 기대 수익률이 적어. 베타가 0이면 리스크 프리 레이시고, 이 기울기가 이거 아니야 마켓 프리미엄이고. 캐피탈 에셋 프라이싱 모형에 의하면 이런 것까지 설명하기 쉽지만 어쨌든 설명을 해야지. 캐피탈 에셋 프라이싱 모형에 의하면 캐피탈 에셋 프라이싱 모형이 맞다면 회사들의 수익률은 여기에 이제 익스펙테이션 막 붙이면 이게 없어지니까 뭐 없어서 상관없어요. 모든 회사의 주식들이 이 선대로 쭉쭉쭉쭉 있다는 거죠. 이대로 기대 수익률이 이렇게 된다는 거 아니에요. 캐피탈 에셋 프라이싱 모델이 베타 크면 이제 각각의 주식 수익률이 이렇게 쭉 시장에 줄 세우면 이렇게 된다는 거지. 뭐냐면 어떤 주식은 기대 수익률이 높아. 어떤 주식은 기대 수익률이 나빠. 수익률이 높으면 리스크가 더 커야겠지. 리스크가 큰데 수익률까지 낮으면 누가 그런 걸 하려고 하겠어. 그래서 리스크가 크면 수익률도 커야 되겠지. 캐피탈 에셋 프라이싱 모델에서 말할 때 리스크가 베타라는 거지. 여러분 종종 파이낸스나 경제학 부동산들이 주식의 리스크가 뭐예요? 리스크가 뭐예요? 분산이요. 이렇게 생각하는 사람들. 절대 여러분 그렇게 생각 안 해요. 분산이 아니라 코릴레이션이 리스크입니다. 베타는 코릴레이션이에요. 시장 포트폴리오. 아, 그래서 코릴레이션이 리스크고 코릴레이션이 소스가 이렇게 된다는 거예요. 근데 오케이. 그래서 리스크가 크면 어떤 게 기대 생기죠. 그런데 어떤 주식들은 여기에 있는 주식들도 있고, 요새 항상 줄을 잘 못 서는 애들이 있겠지. 그네들은 여기 있는 애들도 있어. 그럴 수 있겠지. 얘를 보면 뭐냐면, 얘는 얘의 베타를 보면 기대 수익률이 이 정도 돼야 되는데 기대 수익률이 더 높아. 그렇지? 그러니까 리스크를 컨트롤하고도 더 수익률이 높은 거야. 그래서 이만큼은 리스크 컴펜세이션. 그러니까 이 기울기가 리스크에 대한 컴펜세이션이니까 리스크에 대한 컴펜세이션을 주고도 수익률이 더 생기니까 리스크가 포함되지 않은 순수한 돈인 거 아니야. 리스크가 없는 순수한 퓨어 머니인 거지. 그만큼. 얘네들은 이만큼 베타면 이 정도 기대 수익률이 나와야 돼. 더 낮아. 그러니까 이만큼 퓨어하게 리스크에 대한 컴펜세이션. 그만큼 돈을 잃는 거야. 그래서 이게 뭐냐면 여기서 A지, A. 이걸 A고 여기서는 그러니까 이거 빼면 그래서 A가 있느냐 없느냐. A가 있으면 이게 퓨어한 그만큼 리스크가. 다 배웠지. 어디에 배웠나? 투자론 수업에 배웠나? 뭐에 배웠나? 재무관리 시간에 배워, 투자론에 배워 이거. 어디서 배웠니? 재무관리에서 배웠어요. 그렇지 않았어요. 그래서 우리도 여기서 이 조자들이 트레이딩 스트레티지가 있으니까 이 트레이딩 스트레티지가 이렇게 리스크를 컨트롤하고도 퓨어 머니가 있냐 없냐를 당연히 보고 싶었겠지. 그걸 테스트하겠다는 거야. 근데 뭐냐면 학계에서는 여러분 뮤추얼 펀드나 투자하면 젠센스 알파라고 해서 실제로 캐피탈 에셋 프라이싱 모델하고 이 알파를 보여줘요. 펀드에서 젠센스 알파라고 있거든요. 여러분 펀드 투자하면 다 펀드 설명서 그거 나옵니다. 학계에서는 당연히 인더스트리에서 우리 훨씬 더 바가 높아요. 아카데미아에서는 인더스트리가 훨씬 더 터프하게 캐피탈 에셋 프라이싱 뿐만 아니라 우리는 얘 세 개까지 더 고려해도 이런 리스크 소스까지 고려해도 퓨어 머니가 있느냐 없느냐를 보는 거지 우리는. SMB는 뭐냐면 스몰 펌 이펙트예요. 스몰 펌의 리스크도 크니까 라지 펌보다 스몰 펌에 대한 프리미엄이고, HML은 밸류 프리미엄이라고 해요. 이건 위키피디아 부분 다 나왔어. 밸류 프리미엄에서 밸류 펌이 그로스 펌에 비한 프리미엄이고, 모멘텀은 이전까지 성과가 좋았던 주식들 빼기 이제까지 성과가 낮았던 주식들. 이거 모멘텀 프로핏이라고 해요. 이런 모멘텀 효과와 밸류 이펙트와 사이즈 이펙트에 마켓 캐피탈 에셋 프라이싱까지 몽땅 다 고려하고도 남는 순수한 머니가 있느냐 없느냐를 우리가 체크를 해보고 싶은 거죠. 그렇지? 우리가 텍스를 가지고 10개의 그룹으로 나눴잖아. 저 델타 T로. 근데 각각 그룹별로 과연 이 퓨어한 머니가 있냐 없냐를 보고 싶다는 거지. 그렇죠? 이해가 가요? 여러분들 그렇게 계산했어. 했더니 짠. 네. 인터셉트분의 A고 여기에 남은 이게 코이피션트. 봤더니 이 알파, 그렇죠? 알파 부분이 D1은 낮고 D10은 높아져. 쭉 높아져. 그래서 그 퓨어 머니가 요 텍스 서프라이즈가 크면 클수록 높아지더라. 게다가 D10에서 D1을 뺀 롱숏 포트폴리오를 했더니 여기에 롱, 여기에 숏 포트폴리오 했더니 이것도 시그니피컨트 하더라. 라는 거지. 그렇죠? 얘가 아까 그냥 평균만 보여줬는데 이 평균에서 리스크까지 다 고려한 순수한 머니를 봐도 얘네들이 마켓을 그런 리스크 모델을 비슷하고도 나는 플라스틱이 순서대로 이 소트와 순서대로 이 소트가 그대로 발생해서 결국 우리가 돈을 벌려면 얘네들 사고 얘네들 팔면 포트폴리오 구하면 우리는 돈을 벌 수 있다 이런 말이 되죠. 자기 대답 안 하는 겁니다. 그 다음에 residual tax expense supply. 아까 보면 이거에다 어닝 효과를 고려할 때 residual supply도 했잖아. residual supply도 소팅을 해서 아까 같이 4팩트 모델로 퓨어 머니가 있나 없나 계산했더니 역시나 결과가 비슷하게 나와. 그 앞에 A 부분이 이렇게 쭉 소팅이 된다는 거죠. 어닝 서프라이즈 효과를 고려하고 나서도 남는 뭐가 있지? 프리딕트하는. 아빠는 이런 감기가 유행이라서 감기 조심하세요. 왜냐 플루도 돌아다니잖아. 플루는 아니야. 다음 테이블 4를 보면 자 이제는 아까는 이제 돈 버는 방식이 이제 좀 더 또 다른 과학적인 방식으로 해본 거지. 자 기본적으로 이거예요. 기본적으로 y는 a 플러스 bx인데 네. y가 뭐냐면 미래 리턴이고 이거는 x는 텍스 서프라이즈야. 이번 기회에. 네. 그래서 얘가 커지면 얘가 어떻게 반응하냐. 이제까지 말을 보면 이 B가 당연히 파지티브여야겠지. 네. 근데 이 식만 놓고 보면 다른 것도 효과가 있을 수가 없으니까 이 뒤에 자질구레한 것들도 다음 것도 포함시켜. 이거 하나하나가 그런 거야. 그러니까 이것만 사실이 중요해. 네. 얘와 얘의 관계를 보고 싶은데 다른 것도 영향을 미치니까 다른 것도 집어넣는다 빼봤다 다 하는 거예요. 보면 알겠지만 그렇지. 여기 자가 결국 이 B인데 이게 모두 시그니피컨트하다는 거지. 네? 전부 다 2보다 크잖아, 가로 하는 숫자들이. 이걸 보면 뭐냐면, 텍스 서프라이즈가 1만큼 늘면 미래 수익률이 0.9만큼 된다는 거야. 어떤 식으로 조합을 해서 다른 식으로 만들어봐도 모두 컨시스턴트하게 그렇게 나온다는 거야. 그냥 아까 결과랑 비슷한 거야. 이런 표 볼 줄 알죠? 이런 표 사실 회귀 분석 몰라도 돼요. 이 표를 보면 밑에 설명이 돼서 그것만 보고도 제가 이게 증가하면 이게 증가한다는 말이구나 뭐 그냥 이해할 수 있어요. 이 중에서 계량경제학 수업 들은 사람? 계량경제학 경영통계학 수업 들은 사람? 경제학 학생들은 여기에 대해서 알수 있을 거예요. 별거 아닙니다. 이런 거 10분이면 배울 수 있는 건데 몰라도 됩니다. 그냥 이해할 수 있어요. 책임을 몰라도. 자, 이건 뭐냐면 a 플러스 bx 관계인데 y는 a 플러스 bx인데 y를 각각 다른 걸로 넣어요. x는 똑같아야겠죠. x는 텍스 서프라이즈. y를 첫 번째는 미래의 어닝 서프라이즈. 두 번째는 미래의 어닝에 대한 뉴스가 나왔을 때 회사가 얼마나 반응하냐. 어닝에 대한 뉴스가 좋은 뉴스면 회사 스탁 리턴이 확 반응을 많이 하겠지. 그래서 그게 얼마나 좋은 뉴스인가 하는 거에 대한 말이 되겠지. 세 번째는 미래의 텍스 서프라이즈고, 네 번째, 다섯 번째는 첫 번째, 두 번째랑 기본적으로 이거랑 기본적으로 네 번째는 미래의 리턴이고, 그렇죠? 다섯 번째는 얘와 얘랑 같은데 좀 다른 변수들 더 집어넣어서 해본 거고, 그렇지? 여기서는 미래의 어닝 서프라이즈까지 또 해봐야 된다. 여기서 봤더니 그렇죠? 현재 텍스 서프라이즈는 미래의 어닝 서프라이즈에 파지티브한 영향을 주고, 현재 텍스 서프라이즈가 1만큼 늘면 미래 어닝 서프라이즈가 0.1만큼 늘어나요. 현재 텍스 서프라이즈가 1만큼 늘어나면 미래 어닝을 발표 주식시장의 반응이 0.141만큼 더 커지고, 현재 텍스 서프라이즈가 1만큼 늘어나면 미래 텍스 서프라이즈가 0.286까지 올라가고, 그 다음은 현재 텍스 서프라이즈가 1만큼 발표됐을 때 미래 리턴이 0.5만큼 증가하는데, 여기서 궁극적으로 그 미래의 어닝 서프라이즈까지 컨트롤하고 나서도 남는 부분이 있다는 거예요. 그러니까 미래에 발생할 현재 텍스 서프라이즈가 있으면 미래의 돈을 더 많이 벌겠다는 사람들이 심리가 있는데, 그걸 컨트롤하고도 남는 또 다른 부분이 있다는 거예요. 맨 마지막 부분도 마찬가지예요. 미래 어닝 서프라이즈를 컨트롤하고 나서도 남는 또 다른 추가적인 실적이 있다는 거예요. 과연 그게 뭘까? 이 사람들은 그건 회사의 프로핏에 대한 어떤 근본적인 정보를 포함하고 있기 때문이다 라고 얘기해요. 단순히 어닝, 미래의 어닝을 지속적으로 창출할 수 있는 뭔가 그런 근본적인 게 있어서 그게 여기 텍스파이의 반응이 있는 거다 라고 해석을 하는 거죠. 상당히 용감한 해석이지만 이 어쨌든 워낙 분석을 잘해서 뭐라고 반박할 수가 없어. 그게 뭔지 잘 모르겠어. In sum, the results in table 5, 우리가 방금 본 거냐, are consistent with our explanation for why investors do not immediately appreciate the full implications of the current period tax expense surprise. Okay? We find support for two potential channels by which information contained in current period tax expense surprise is reflected with a delay. 그렇죠? In subsequent stock return. The first channel is that tax expense surprise predicts next quarter's earnings surprise, okay, which is positively related to the next quarter return. As a result, that information is reflected in stock prices when future earnings are revealed to the market. The second channel, which is more interesting, is that tax expense surprise predicts next quarter's tax expense surprise, which is incrementally positively related to the next quarter's return beyond information reflected in next quarter earnings surprise. 아까 표현된 내용 그대로 설명합니다. Evidence consistent with the second channel reinforce our hypothesis that tax expense surprise is a proxy for fundamental profitability, and it contains information about fundamental profitability incremental to that contained in reported earnings.